then, Axis Bank reported weak set of numbers for the second quarter. Profit fell over 26% to 5,090 crores compared to last year on the back of higher provisions and credit costs. Meanwhile, the NII and operating profit managed to meet the street estimates. However, the private lenders saw improvement on the asset quality front. The gross NPA narrowed to 1.46% from 1.5% in the previous quarter, while the net NPA stayed almost flat at 0.4% versus 0.45% on a sequential basis. My colleague Ashesha is now joining us with all the number crunching. Take us through the numbers, Ashesha.
Well, yes, Axis Bank has reported weaker than expected set of numbers, and it's a big miss as far as profitability is concerned. Although operating profit and net interest income has come largely in line with what the analyst community was suggesting, but it's a big miss as far as profitability figure is concerned. Let's take a look at the figures versus ET Now poll. So it has reported a net profit of 5,090 odd crores versus ET Now poll of about 5,840 odd crores. As far as net interest income is concerned, 11,000 or rather 13,744 crores versus poll of 13,300 crores. But this is largely in line with what the street was working with. Profitability is where we have seen a big miss. Let's also take a look at provision figure, because that has also disappointed the street. Provisions and credit costs have been higher than what the street was working with. Bank has also made an additional one-time provision of about 1,231 odd crores. This was as per RBI guidelines. So yes, higher provisioning is a negative. Profitability has come in lower than what the street was working with, and clearly it's a disappointing set as far as Axis Bank is concerned.
Thanks very much, Ashesha, for putting those numbers into perspective for Axis Bank. And joining us to decode these numbers further is Mr. Parag Thakkar. He's a senior fund manager at Fort Capital. Parag, what do you attribute this weakness to as far as Axis Bank's numbers for the quarter gone by are concerned?
Yeah, so basically, thanks a lot for inviting me on the show. So my view is very clear that Axis Bank is a very cheaply valued bank, very attractively valued bank. It is trading at 1.5 times book and only 10-11 PE on FY27 earnings basis. And I would like to say that on the operating side, the bank has done well. QOQ loan book growth was 5%. YOY loan book growth was 11.8%. NIMs, which were down just 7 bips QOQ to 3.73%. NII was good, above estimates. The only missing link was, as she pointed out, that it was on the side of provisioning. And that provisioning is that 1,231 crore number is a static provision as directed by RBI. So it is a one-time provision. It is not a recurring provision. So I would say that the profitability looks optically lower, but actually the bank has not done anything bad. And in my view, it is a long-term investor will have a good opportunity to buy on dips because of the optically bad numbers. And one should look through this bank as a 3.8% NIM bank, which can grow at 300 bips above the system, which means 13 to 14% growth, and a 1.7% ROA bank, which is available at 1.5 times book, and which makes it an attractive and compelling investment case. Of course, for short-term investors, I would like to caution that because of this very low inflation coming in, there is a chance of further rate cut in December, and that will prolong the margin recovery cycle. Although on an average basis, steady state basis, they will do 3.8% NIM, but there might be some delay in the recovery of margins, which was expected. And Axis Bank has itself called out that their margin will bottom out in Q3 and not Q2 like other banks. So it is a long-term investment value buy on dips, and if that dip comes tomorrow, definitely it's a good long-term buying opportunity because this is a one-time thing.
If you say this is a one-time thing, clearly provisions were a disappointment, and you mentioned the reason behind it. The credit costs were also higher, and the profit also was a miss. It was a big miss, actually, from what the street was penciling in. And if you say that perhaps it was a one-off and there will be an improvement going ahead, how do you expect the stock to react tomorrow? And since you're saying it's a buy on dips, what is making you so optimistic about Axis Bank?
No, first of all, a long-term investor has to buy when there is a bad news. And this is a good franchise, conservative franchise, built on strong foundations. They have a strong deposit franchise. It is very unfortunate that Q1 and Q2 both had these one-offs. But in Q1, remember, the provisioning was a technical write-off, and that technical write-off actually contracted by 85% in this quarter. So which is a very good thing that it was actually a one-off because that 2,800 crore number has become 285 crore. So it was actually a one-off, and like that, this 1,231 crore is also a one-off. So in fact, it fits into my investment philosophy that one-time problem has happened. Let us look at a bigger picture that across the cycle how this bank will do, and it is very clear that it will grow at 13 to 15% in terms of earnings after the rate cut cycle is over, and that you are getting at 10-11 PE, and it is a 1.7% ROA bank which is available at 1.5 times book. So that makes me positive on the bank, and if due to optical reasons, and some people might have doubt that okay, this has happened in 2 quarters consecutively, so how can we say that this will stop? So the management said on the call that we are also hoping, and that RBI did that inspection, and that is over now. So they also don't expect any such things to happen in future, but nobody can predict it with 100% probability. So that uncertainty might cause a correction tomorrow of 2 to 3%, which should be a buying opportunity in my view from long-term perspective, not at all from short-term perspective.